All right, hey, welcome to Real Estate with Soul, the podcast where we explore the heart and soul of the real estate industry. I'm your host, Colin Nathan Aleem, the real estate boy, and together we'll be diving into the stories and experiences of professionals who are dedicated to serving underserved communities in the real estate industry. So, whether you're a real estate professional, a home buyer, or simply interested in the real estate industry, this podcast is for you. So join us as we dive into the world of real estate with soul. I have a very, very special guest. Caitlin, why don't you introduce yourself?
Hello, everybody. It's a pleasure to be here. I'm Caitlin Davis, private lending specialist, owner of Nirvana Funding Solutions, and mortgage loan originator based out of Philly.
Awesome. Well, Caitlin, thanks for joining us. Me and Caitlin do have history.
Me too.
I've done a deal with her
Mhm.
in the past, so definitely great experience. But I wanted to bring her on because she is the self-proclaimed queen of private lending. So wanted to bring her on. Why don't you tell us what that means as far as being the queen of private lending? What's the difference between private lending and I guess other lending?
Yeah, definitely. So, private lending is in the sphere of, real estate investment lending. So, non-owner occupied loans that you get without having to go through a bank. And there's a lot of other capital sources. So, what sets me apart is really my history within the business. I started off, as a loan originator working for a startup company, learned a lot, all the ins and outs of the business, and took that and kind of grew. So from there, I also am licensed in Pennsylvania to originate your traditional mortgage loans as well. So that has been a recent change for me. So at this point, I've been merging my private lending expertise, a really strong and diverse array of loan products with the traditional mortgage realm as well. So um, that's an exciting journey that I'm on that helps everybody.
Gotcha. Okay, so let's break that down as far as private lending. I guess what's the difference? Why would I want private lending, and who's private lending really geared towards?
Yeah. So really anybody would want private lending, right? So there are investors who have been doing this for 50 years, all they've ever done, and they use private money because banks have restrictions. Banks are great in some ways, right? So they'll have their community development kind of funds and all of that. But in essence, a lot of investment transactions have to happen quickly. There has to be flexibility there when it comes to the deal itself and the qualifications of the sponsor. Because we're dealing with like a self employed kind of group of individuals, nine times out of 10. So, private lending really makes it easier and more accessible for people to get funding and financing because they're going to have lower credit score requirements, honestly, higher leverage. So, you're putting less money out than you would if you're going with a bank. We have a flexible, kind of creative mindset, and all we deal with is investment transactions. So, you're not, having to work with people who don't really understand the space. So it's a streamlined process. You close a lot quicker. You don't need any kind of income verification, tax returns, W 2s, or anything of that nature to get a loan done. You just pretty much need a 620 credit score. Sometimes there's even flexibility there, and a good deal, and the cash for your down payment and reserves.
Gotcha. So this is private lending is more towards an investor. So for an investor, this is somebody who's looking to buy a property not to live in, but this is as an investment property. So they're looking to make money off that property. So I guess just to slow walk it for an individual, if this is their first time hearing about
Mhm.
private lending, okay, if I'm an investor, where am I going to get at my money? Number one, I can do cash.
Mhm.
So if I have cash on hand to buy this property, then I can do that cash on cash, or I can get a loan. So if I'm looking to get a loan, there are a couple of options out there. Number one is, like most people think, I can go to my local bank. I can go to
Mhm.
my local bank and try to get a loan from them. But of course, a lot of times they don't want to do those type of loans. They want a paper loan, and they want people who are going to live in those homes, because people are more, they buy in more if they're living in that home versus it being an investment property. So I'm looking to buy a home for, so I can, as a business. So I can't get the money from the bank for whatever reason. So now I need to look other places, and I guess private lending is other places. Would that be correct?
Exactly. Yes, that is correct. And private lending is really the place to go, in most situations. So, but understanding your options is very important as well. So, if a bank, isn't a good fit for a deal, private lending will gladly review the deal and look at every possible way to get it funded for you.
Gotcha. Now, people, there's of course a buzzword as far as hard money.
Mhm.
So would private lending, for those who don't know out there, would private lending be the same as hard money? And if not, what's the difference?
It can be. It definitely can be. So, there has been kind of an industry shift within the name hard money
Mm,
to private lending. So
okay.
private lending has its different umbrellas. It has its different tiers that it falls down
Okay.
into. So you could, be somebody who is like an absolute hustler and able to get somebody to lend money out of their IRA
Okay.
or their retirement. That's what some people think is private lending,
All right.
but there's so many different capital sources within that. So it's just arranging that debt. Typically, private lending is a fund, a pool of these different capital sources, and they all have different loan requirements and different, qualifications. Some, would consider themselves hard money because maybe they don't do credit checks or anything of that nature, and you're just paying for that in points and rate. So, long story short, private money falls down into a few different verticals, but they're all much more flexible.
Okay, because it
Mhm.
almost seems like a rebranding, because you know how it used to be Kentucky
Yeah.
Fried Chicken, now it's KFC,
Yeah.
because they wanted to rebrand. So, and correct me if I'm wrong, but it almost seems like some of these banking institutions and lending institutions want to get into the hard money game. So maybe they rebranded it as private money. Now, usually when you go, like you said, for hard money. You don't really, I mean, they look at your credit, but it's not a determining factor. It's a determining factor on how much they charge you as far as the interest rate, but it's not a determining factor on whether you get the money or not. um, I guess, is the requirements the same, where private money is looking on the investment more
Oh,
than
yeah.
the actual person who's taken out the loan?
Yes, yes, definitely. It's
Okay.
asset first, investor second. Um, and with a really strong deal, you do have to have certain things in order. But of course, that's what I was getting to. Like hard money, there are different lenders within hard money. There are different lenders within private money that have
Hmm.
different requirements.
Okay.
Um, but it really is asset first. You want to make sure you have a good deal, nice spread, and then we go from there.
Gotcha. Now, as your particular role, would
Mhm.
somebody come to you, I guess, give you their information, and then are you going to different private lenders, maybe as an advocate on their behalf, to kind of see what's the
Exactly.
best route for them, and then
Mhm.
presenting them with their best option?
Yes, exactly. So especially when you're getting started in this space, it can be very like overwhelming to, can I trust this lender? Who are these guys? Am I in the right hands? Are these the best terms that I can get?
Mhm.
So my job is really putting that all together. I have connections in the space with all the lenders that I work with, and I understand the process. So I'm able to really clarify everything, and then shop for the best loan, the best rates, and the best terms, given the scenario.
Gotcha. Now, why don't you give us a little bit as far as your background and history that makes you qualified as far as to be the best person to for me to bring my information to it and for you to go out there and advocate for me.
Yeah. So I started off again with a startup lender in Philadelphia, and I learned a lot about the process and just how to grow a lending business.
Hmm.
So taking that and then also being me and a woman of color and somebody in the space that wasn't really seeing a lot of representation and all of that, and maybe not as much fairness in some kind of situations, it really kind of touched a part of me.
Hmm.
And there are options, and there are loan officers out there that they'll call and just give these investors hopes up. No, sorry, bye. Versus figuring out an attainable plan to get them funding and not charging them an arm and a leg. Like, there's a lot of brokers out here that just really take advantage of a loan or a situation. Maybe they
Hmm.
have super high overhead cost or whatever the case is, but that's not how I approach business. It's about, you know, building together versus, one end of the spectrum. So everything's very transparent. There's nothing to really worry about.
Gotcha. Now, coming
Mhm.
from, because a lot of people probably have bought a home themselves, okay, like
Mhm.
as a owner occupied home, a home that you actually live in, but now they're transitioning to being an investor. So, what type of
Mhm.
terms do these private products usually have?
So there's typically, for a first time like investor who wants to
Mhm.
purchase an investment property, the what lenders like is 30% down,
Okay.
25 to 30% down, and then your lender will fund 100% of the renovation cost. But there's, compensating factors there, but that's just kind of the standard for a first time, like fix and flip or fix and hold, which is when you refinance it after and hold it as a rental property um, type of loans. And then rate for a first time investor will probably be about 11% with this
Mhm.
market right now. And then origination, 2%.
Okay, origination 2%. Okay. Now, does that go across the board? Meaning that does that matter as far as my credit score? If I have a 800, am I going to do better with some of these parameters or terms?
So when it comes to credit score, yes, I mean credit score is strong, but at the end of the day, the leverage,
Hmm.
which is how much you're getting towards the purchase price, that's going to be based mainly on experience.
Okay,
So,
experience.
yeah, experience is going to be that prime. There's pricing tiers from there. Um, but if you have a good deal if you luck out and you find a good deal with some really, really good spread and there's a really decent profit there, then we might be able to get you some more leverage and then the credit score, that's really going to come into play when it comes to those rental loans, the permanent financing, 30-year fixed DSCR type of loan.
Okay. And why don't you expound a little bit more on a DSCR loans? Are all of
Mhm.
these DSCR loans, or just some of them?
No. So the first part of the loan, if you're going to find a property to renovate, add some value to, that's going to be a short-term 12-month interest-only bridge loan.
Okay.
So you have 12 months to renovate the property. When you're
Hmm.
done with that, you're either going to sell it or you're going to hold it as a rental property and just pool the equity out of it. Instead of selling it, you're going to just do a cash out refinance and go into a 30-year fixed mortgage. And then we calculate that. DSCR stands for debt service coverage ratio. And if you're going into a DSCR loan, the loan that we give you, the rental income you receive needs to essentially exceed what your monthly payment is by a certain amount. So it's profitable and cash flows. Those are based on credit score, those rates. You typically need a 660 FICO to qualify for a DSCR rental loan.
Hmm.
And then if you have a 800 FICO, you're going to get the best leverage for the cash out refinance and then the best rate on top of that.
Okay.
Mhm.
So you have two. I mean, I'm looking at this here, and like you said, for this 12-month bridge loan, your intention is either to sell it, meaning flip the property, meaning that you buy the property, and I guess when they're giving you those monies, they're giving you it for the acquisition and the rehab. That's all tied into one loan, correct? Or are those two different ones?
Yeah, so it's all tied into one loan. So, for example, if this is your first deal and the
Hmm.
purchase price of the property is 100K,
Hmm.
like I said, typically for your first deal, you're going to need to put down 30%. So, we'll fund 70% of that
Okay.
100K.
Okay.
So, the initial loan amount would be 70,000. And then your construction budget, let's say, is, 30,000. Um, then your total loan amount is 100,000, but the 30,000 you don't get all at once at
Hmm.
closing, right? So you have to do portions of the renovation, send those invoices over to your lender, and they will send an inspector out there, verify the work was completed, and then reimburse you from there. So that's one loan, a 12-month term, and then you either sell or refinance at the end.
Okay, so you don't have to tell as far as the lender what you want to do beforehand, or is that known beforehand whether I'm going to flip this property or whether I'm going to buy and hold?
Well, what my job is to do is to analyze both exit strategies
Okay.
with you,
Okay.
right? So it's always good if you find a deal and you're like, oh, I'm totally going to flip this. I have no intentions of holding it
Hmm.
100%. The lender is just going to underwrite it as a fix and flip.
Okay.
But if you possibly want to hold the property, you don't know, maybe the market's a little rocky, whatever the case is, then it's important for your lender to qualify the loan when you refinance as well and when you flip it so you can make sure both options work for the deal.
Gotcha.
Mhm.
Now, as far as the market right now, I mean, I guess what's been your experience? Because I know 2 or 3 years ago, there were a lot of newbies getting into the
Mhm.
market as far as in Philadelphia in particular. You got a lot of people coming from New York, from
Mhm.
DC, getting into the Philly market. Is it still like that now? What have you been seeing as far as the local investment market in Philly?
Yeah, the local investment market is definitely still strong. I because of, you know, all of the interest rate hikes and all of that, the first time investor wave has to kind of slow down a little bit just because they're not used to navigating these markets and these
Hmm.
high interest rates, and they hear rates are high, they just don't want to invest right now.
Right.
But I'm seeing a lot of bigger players come into the market right now because they know how to navigate this. They're not afraid of it. They're seeing these opportunities,
Hmm.
and they're still going for it. So I think that the now that rates are on the decline, that's going to change, and we're going to get a lot more of the first time investors back in, which you know I definitely root for. So. Mhm.
Gotcha. Um, I guess my question has always been, what type of default rate do you guys see? Because I just went through a situation where I had a buyer who bought a they bought a home that was in foreclosure from a hard money company or a hard money lender.
Mhm.
But I guess what type of rate do you guys see as far as of default of people getting into these loans and not managing them correctly or whatever, and having to go into
Mhm.
foreclosure to the bank?
So none of my loans, thankfully, that I've done have ever defaulted.
Okay.
So there have been situations where we're getting close to it. We have to really figure something out,
Hmm.
refinance, put them into another bridge loan.
Okay.
Um, but thankfully, nothing that I have touched has defaulted. So with that being the case, there are other lenders out there that were lending on more riskier projects, and when the market shifts and interest rates go up, they weren't underwriting the exit strategies of refinancing to the correct interest rate.
Okay.
So now they're stuck in a loan that's a negative cash flow situation, and lenders don't want to really take them out of that.
Mm,
So some of them go to default, but I honestly don't really see that a lot. I see a lot of bridge refinance out
hmm.
of that bad loan to give them more time to either sell the property, take a
Okay.
loss, or refinance out. I mean, that's really the way to do it. And if it's not that route and you defaulted, it's a lot of times it's because you weren't communicating with your lender, you weren't
Mm,
really looking at all the options, and you kind of just let the weight of everything crash on you versus,
mm.
you know.
Okay. Yeah, no, that definitely
Mhm.
makes sense. One of the biggest issues with, especially with newbie investors, is the evaluation of the deal.
Mhm.
So, I guess when they bring a deal to you guys, I guess they have to underwrite it, or
Mhm.
so is it you that's kind of looking at the deal and saying, okay, this kind of makes sense based on the acquisition price, based on the construction, based on the after repair value? Is that something that you do for your clients, or is this something that the underwriter would have to do?
Definitely. So, whenever it comes to the deal, at the end of the day, you have to understand that your loan officer or, me is not an appraiser, right? So, we're going to do our best to, verify your numbers, but at the end of the day, we can't see the property. We don't know what's going on. So, everything is really heavily based around the appraiser, which is why it's important for you to analyze your deal the best that you can on the front end. So look for comps. This needs to be a mutual experience. You're not just going to throw a property at your lender and say, hey, what can you do for me on this?
Right.
You need to get the comps. You need to do the due diligence. It's not that much work to do. So you can get an estimate like, hey, based off of these pictures I'm seeing online, it looks like it's just going to be a cosmetic rehab that's needed. We're not going to need to go too crazy here. I would say about 50K because that's just kind of a standard
Mhm.
30 to 50K cosmetic renovation. So you can work that in. And then the most important part is the after repair value. So you want to see what properties are selling for in the direct area. And the biggest mistake I see with investors analyzing their comps is that they always look for the best comps,
Mm,
right? They always look for the best ones. They don't look for the property rate, two doors down that sold for a value lesser than. They're looking at the one a block down that has even better finishes than what they're planning to do, that sold for this amount. So realistic comps within a realistic area is going to get you what your ARV is. And then we put those numbers together. We talk about some scenarios. Well, what if this comes in lower? What if this comes in higher? And and then we wait for the appraisal to come in, and then we really solidify everything from there. And then my job is to make sure the package is together before it gets to underwriting.
awesome. And just to piggyback on that, if you are doing a flip, what a lot of people don't look at is they don't look at the properties that are on the market right now or on the
Hmm.
market when they sell the property, because really that's your competition.
Hmm.
That's your
Exactly.
competition. So this
Hmm.
home could be worth $200,000, but
Hmm.
if somebody's selling that same home at
Hmm.
$180,000, that's your competition. So
Right.
if you put your home up for $200,000, it's going to be overpriced because this other person put theirs for 180, and it's the same house.
Exactly.
So
Hmm.
so people definitely have to take that into consideration when they're putting their homes on the market to sell.
100%.
All right. Um, so as far as interest rates go right now, I guess what do you think is going to happen come in 2024? Of course, we don't know the unseen as far as
Mhm.
what's going to happen, but I don't know what's your prediction as far as what's going to happen in 2024 as far as interest rates.
So I do see them tapering down a bit.
Hmm.
I don't think it's going to be anything too dramatic, and too crazy because I think the Fed learned from that
Okay.
last time, and they're going to try to prevent that kind of crazy wave and, you know, home prices going up to exceed, like, when interest rates go down, there's so much competition. So the property values and, these, what these properties are selling for outweigh the value and the interest rate that you had before. So like it's just really, I think it's all going to stabilize. I think things are going to be normal in 2024 versus high or low.
Okay. Yeah, and that's what people have to look at. I do think sometimes the uh the newspapers, they just want to sell newspapers. So they keep
Mhm.
telling you, oh, the interest rate is high, the interest rate is high, the interest rate is high. Well, the thing about it is, if you look at over the last 49 years, we're really at a normal interest rate right
Mhm.
now. And then what's going to happen in the future if the interest rates go down? People are going to flood back into the market. And that's
Mhm.
going to drive the activity up because we're at like a
Mhm.
1/4% less activity now than we were a year ago.
Mhm.
So if people come back into the market, that's going to shoot everything back up. So really, right now is an excellent time to be out there buying homes, especially during this month. During
100%. Mhm.
November and December, this is like the lowest appreciated months for housing because they're just and people. A lot of people are waiting for the new year, so on and so forth. So you have a lot of sellers out there who are pressed to sell, and so they're making more accommodations than where they would normally
Mhm.
make. So if you kind of wait until January, February, or March, or especially the spring, is that home prices are going to go rise and rise and rise because more people are getting into the market. It's all about activity, people. So the more activity you have in the market, the more a lot of times it drives the prices up. Is this something that you've been seeing?
Oh yeah. 100%. So, especially right now, like you can get seller concessions on properties a lot easier, which is when, the seller pretty much gives you a credit
Hmm.
for closing costs for purchase. There's a lot of like just flexible. Now's the perfect learning time.
Mm.
You're not really going to get kicked around with other offers right now. If anything, it may be a little bit of uh, tricky to make a deal profitable, right? To get the numbers to work with just where interest rates are right now. But it's doable, and you're not having to worry about all these, families and people trying to outbid you and all of that. So it's a great time to really start learning the process and really start putting yourself out there and submitting deals and um, all of that before it gets crazy because people just don't know how to act when interest rates go down. Like it's just crazy.
It's the wild, wild west. No, you touched
Yeah.
on something very
Mhm.
important. That's learning,
Mhm.
learning the business. It's not just watching HGTV or seeing these gurus on online on Instagram, and it's like, hey, I'm
Mhm.
just going to no. This is a science. And you really have to kind of learn the ins and out. A lot of people come to me, and it's like, "Hey, I want to buy a property," and it's like, "Hey, do you know what a cap rate is?"
Mhm.
And it's like if you're trying to buy a home and you don't know what a cap rate is, then you really need to go
Mhm.
learn. And there are plenty of books on how to buy a home, an investment home from A to Z that teach you
Mhm.
about all of those things. So I know everybody wants to earn quote unquote passive income, which a lot of times is not that passive, but and it's great. This rental industry is great. The flipping industry is great, but you can make a lot of money, but you can also lose your shirt. And that's
Mhm.
not to sound like a curmudgeon. I think I said the word right. But not to be one of the like not to be melancholy or to be sad about this, but you don't want to lose your shirt. Okay.
Mhm.
And it's better to pass up a deal versus to get into a bad deal and lose 20,000, 30,000, 40,000 for something that could have been prevented. One of the things that I do suggest is getting some type of mentorship.
Mhm.
Somebody that can, because you're going to spend either way. Either you're going to learn from a mentor, or a lot of times you're going to learn from the school of hard knocks.
Mhm.
And if you learn from the school of
Absolutely.
hard knocks, that's a lot of times it's a lot more hurtful, or it hurts a lot more than learning from a mentor. What's your thoughts on it?
I agree. I mean, I think. There's a lot of different ways you can find a mentor.
Hmm.
Honestly, even if you're starting off like, you know, walking by a construction job site, like if they're cool, hey, do you mind if I just stop by and see what you're doing here? Or whatever the case is, like there's always ways you can learn from people. And it's taking those opportunities and being creative with them and molding them into like your dream, and what you want to do. Like I've seen a lot. Like I've worked with first time investors all the way through, and like, one second it's this like scared little kid to now you're and this isn't everybody's story, but now you're on a yacht in Miami and like doing this, that, and the third, and just so confident. And it all starts with learning and putting people around you and being in the right places for your goals. Like, if you want to invest, you know, maybe on Friday night you go, you find like little events to go to. It's all of
Hmm.
that, culminating.
Right, and that's something that's very important is the relationships.
Yeah,
And this is something
100%.
and this is something that I struggle with, because it's like kind of as you get older, a lot of times you get more secluded,
Yeah.
versus when you were in your, I don't know, early 20s or whatever. You're kind of out every weekend and you're socializing, but it's like as you get older you kind of step back a little bit. So even me myself, I have to push myself to get out there and start making new relationships with people, because a lot of times that's where these deals come
Hmm.
from somebody knowing somebody personally, and it kind of get, um that's how you get the deals. I don't know what you think about that.
Yes. So my advice for people who maybe are a little, have grown into a certain type of solitude, like you can go out and network and meet people and don't even have to go to like real estate bars and like networking little events. If you are more of a solitude type of person, maybe you should be going to like city events and, town halls and stuff like that, and just mingling and seeing what's out there, because a lot of people invest and a lot of people, you know, that you want to connect with aren't even going to these events, and they're going to other community development kind of, you know, things like that. So just get yourself out there for sure. Some way, shape, or form. There's a way to do it for everybody.
Right, then you have social media, which is to be
Yep.
social.
Mm-hmm.
So this is a way that a lot of people socialize also.
Yeah.
um as far as, because I'm going to go on private lending, then I'll talk about, then I'll talk about somebody buying for their personal residence.
Yeah.
As far as private lending, um if you could pick maybe one program out there, that you would want to talk about, I guess, what would be a special program that you would want the people to know that you have access to that maybe everybody doesn't have access to?
Yeah. So it's definitely going to be the 100% purchase price and 100% of rehab
Mm,
financing. So it's a little tricky to find a deal that works for that 100,
okay.
but you can get it being a first time investor. You need a minimum 620 FICO. And if you find a property where the purchase price and the rehab budget doesn't exceed more than 60 to 65% for your first deal of the after repair value, then you can get 100% of the purchase price financed, 100% of the rehab, and all you have to come to the table with is your closing cost, so taxes, title fees, interest reserve, stuff like that. But down payment is taken care of. So,
Wow.
yeah. And for experienced investors, we could do 100%, 100% at 75% of the ARV. So, I
Oh
don't
wow.
like that. I like
Okay.
that 70,
Okay.
75 to me is just a little too risky.
Okay.
But yeah, it's doable.
Oh wow. So even if I'm a first time home buyer, if I have a 620 and I have a, so let's break that down as far as, let's say 60%. Okay. So to keep the numbers even, or to keep the numbers easy, if I have a house where I think the ARV after repairs is going to be $200,000, then
Mhm.
if I go back to 60%, then the acquisition and the rehab costs can't be over 120,000.
Exactly. Mm-hmm.
Okay, so maybe for this particular, in this example, maybe I buy the home for 80,000. So if I buy the home for
Mm-hmm.
80,000 and the rehab cost is going to be 40,000, then for that, and I'm thinking that the ARV is going to be 200,000, I can get 100% financing for the acquisition, and I can get 100% financing for the construction.
Exactly. Now, it's a really strong product. Now, with that, you do have to have a couple more things in order to get
Okay.
100% financing. So your credit can be, that 620,
Mm,
but you do need to have like 2 years tax returns, W-2s. You need to have income and decent reserves in the bank account as well. But so that's the thing, like private lenders don't typically require tax returns,
hmm
W-2s and that kind of stuff, but for this program you are required to provide those.
now, do you have to have a 9 to 5? Um,
No.
okay.
No, it can be 2 years business
Okay.
bank statements.
Oh, that's crazy.
Hmm.
Okay, yeah, that is nice.
Yeah.
All right, guys. Well, y'all heard it here first, man. We have 100% acquisition and 100% financing for those who have over a 620 credit score. We're looking at 60 to 65%, and but you are going to have to show your financials. Okay,
Hmm.
so you are going to have to show like you said, W-2s or 1099s,
Hmm.
and 2 years of tax return. So it's a little bit more involved than a lot of other um, private lenders. So that's an awesome program.
It is.
Um,
Hmm.
and as far as personal, lending for an owner occupied, I guess what type of programs, maybe with down payment assistance, are you
Hmm.
seeing out there? I mean, what's one that you can really hang your hat on right now?
Yeah, there's a 10K grant
Okay.
for Philly first time home buyers.
hmm
You just got to take your class and get qualified. That's a very nice one. But I think for people who want to get into investing,
hmm
but still want to obviously have a residence or a roof over their head as well. I think the FHA loan is a really great route for that. You can purchase, up to 4 units, 5%
hmm
down, and live in one of them for at least a year, rent
Right.
out the others. And like, that's just a brilliant strategy, which is house hacking.
Yes.
Um, and yeah,
Okay.
so there's another 5K grant for
Front door.
no, I don't, it's home ready is what
Okay.
it's called.
Yep.
Yeah, it's a home ready 5K grant.
Okay. Gotcha.
Mhm.
Okay. All right. Well, no, that 100%. Now, let me ask you, as far as the 100% by 100%. I guess that's what I'm calling it.
Mhm.
Um, um, do do they add, as far as interest rate, because of their exposure? Do they add a little bit something onto the
Yeah,
interest rate
the
for the
the
original?
rate, like the last deal, it priced at 12,375.
Okay.
So rate is probably going to be a little bit higher. 12 and a half ish is what you can prepare for.
And is that a balloon payment also?
Yes, it's a 12-month term, no
Mhm.
prepayment penalty,
Okay.
interest only.
Okay.
Hmm.
Yeah,
And
that's
you
great.
can do that up to 8 units, 1 to 8
Oh wow.
units. Now, first time investors, you guys are capped at 1 to 4, you know,
Okay.
the residential, but yeah, you can go up to 8 units. I'm mixed use.
Okay.
Hmm.
Now here's a, realtor question.
Hmm.
Um, does experience, if you're a realtor, does that count as experience, or does it have to be your own personal buying and selling?
I mean, it helps.
Okay.
It definitely helps build a case to request some kind of exception,
Okay.
It's not kind of set in stone. There are lenders out there now. The 100%, 100%. I would say if you've been an agent for like 5 years, whatever the case is, maybe you have a rental, you own your primary residence. I would say you'd qualify at the 70% of the ARV.
Okay.
But that would have to be, discussed and kind of um, approved, to say the least.
And that's why it's good to go through somebody like Caitlin, is because she
Mhm.
can help you before you get to the end decision maker.
Mhm.
She can help you build your case to why you should get an
Exactly.
exception, and she
Mhm.
kind of knows what the groundwork is before you actually get there. So
Mhm.
if you are looking to invest, if you're an investor now and you're looking to invest, it's really worth it to look at this product. Again, it's 100% of the acquisition, because I have somebody on TikTok who's saying it's always 100%. What they're talking about, what he's I guess he's talking about, is the construction.
Mhm.
Usually the construction is always
Right.
100%.
Mhm.
But as far as the acquisition, is definitely not 100%
Mhm.
all the time. This is definitely the exception, not the rule. So with this particular program, you get 100% of the acquisition, meaning the purchase
Mhm.
price. So if I want to buy whatever the purchase price is, they're going to lend you 100% of that. And then they're also going to lend you 100% of the construction
Mhm.
budget, also, which comes in draws. But that's a whole nother different story.
Yeah.
Um, and with the other parameters, you're not going to have to come out of pocket, but for the closing costs, right?
Mhm. Exactly. Closing cost and reserves.
Okay.
So, like, typically you would, in a perfect scenario, it'll be about 10 to 15K.
Okay.
And that's like a 200 plus kind of loan amount.
Hmm.
Um, you know, Ideally, if taxes are low and all of that, maybe closer to like that 7 to 10K range. But hypothetically, even if the ARV came in lower
Hmm.
than you thought, your down payment is just the difference of of that and 70% of the ARV, you know? So
Gotcha.
mhm.
What's the turnaround time for this? What do you usually see?
10 to 14 days.
Okay.
I like to prepare my clients and say 21 days because you never know what pops up, especially with the, tax portion of it and all of that. We just got to make sure underwriting has enough time to do what they need to do.
Hmm.
So at 3 weeks to 4 weeks.
Okay.
Mhm.
Okay. And that makes sense. And as
Yeah.
far as the appraisal, are you doing drive-by appraisals, or are they actually going into the property?
Yeah, it's going to be interior, exterior for the appraisals.
Okay.
Maybe case by case.
Hmm.
We can do a drive by, whatever if it calls for that. Maybe it's a property that you don't have interior access to,
Okay.
but you have experience. You've done this before, kind of situation.
Wow, I'm excited. That's awesome. I wasn't
Mhm.
ready for that at all. So, Caitlin,
You got orange back.
right? Why don't you
Mhm.
tell people where they can find you or contact you?
So I'm on all social media platforms, Instagram, LinkedIn, and then the best way is really just pick up the phone and call me or shoot me a text. My cell is my personal cell. It's 347-640-0774. My website is www.nirvana, F as in Frank, S as in Sam.com. And yeah, you can book a call, whatever works for you. Reach
Awesome.
out
And
to me wherever.
all of her
Mhm.
information will be in the description if you missed that also. And I'm just going to announce on here that I will be doing a weekly real estate investing class. Okay, so I'm going to be putting it on my YouTube page, which is YouTube. You can go to my YouTube page, just go to YouTube and type in real estate bull, BUL, and that should definitely come up. But I'm going to be doing a weekly class. I'll probably pull in Caitlin and pull in some of my other lender partners, and so we can educate you guys, so that when you get to Caitlin, you're not stumbling and fumbling and don't know what to do and wasting everybody's time.
Mhm.
But we're going to look to educate you guys, so we can make money out there also, and not just have the Black Rocks and those individuals make money and leave us out in the cold. Got one comment on here. If I can get to it, I'll see what it is. But I'm probably okay. No, it's just
Hello.
my aunt. It's just my aunt saying hello. But- all right, cool. Well, I want to thank Caitlin for her time. Again, all of her contact information will be in the description. And again, this is Colin Nathan Aleem, the real estate boss. So if you're looking to buy a home, sell a home, or invest in real estate, I got you. All right, y'all.